Hi, everyone. Thanks for joining us here today. As mentioned before, I'm Jason Sappor, Senior Analyst from the Metals and Mining Research Team at S&P Global Commodity Insights. I cover the nickel market for our team, and I'm the author of our Nickel Commodity Briefing Service report. Today, I'll start my presentation by giving an update on the impact of the nickel market short squeeze that hit the London Metal Exchange in March last year. It's been in the headlines since then. It's dominated the nickel market headlines, and it's important for this forum because the LME price is the main global benchmark price for nickel, and it has historically been used as a basis for key battery-grade nickel sulfate input products. And following that, I'll discuss our global nickel market demand and supply forecast with some tidbits on how the squeeze may have affected those. For that, for those who are unfamiliar with S&P Global Metals and Mining Research offering, we publish all our intelligence on the S&P Capital IQ Pro platform. There you can find everything from financings for the earliest stage of exploration to our commodity briefing service, which comprises monthly reports covering the supply, demand, and price forecast for 7 key commodities, including nickel. And the forecasts I'm going to present here are based on the May Nickel Commodity Briefing Service report. So I'll start off by giving a brief refresher of the events of the squeeze last year. The chart here shows the LME 3-month nickel price for 2021, 2022, and 2023. The LME short squeeze itself happened in March 2022, and it was triggered by rising concerns that Russia's invasion of Ukraine could push Western world governments to impose sanctions on nickel exports from Russia, which is one of the main primary nickel producers. And yeah, this sparked an intense short squeeze. China's Tsingshan Holding Group, which reportedly had built a large nickel short position on the LME, it then scrambled to cover this position amid rising prices. And as a result of that, this caused the LME 3-month nickel price to jump by 251% over a 2-day period to over $100,000 per ton in trading on the 8th of March last year. And this was nearly double the record high from May 2007. And this price surge forced the LME to suspend trading and cancel all trades made on that day. LME nickel trading restarted about 8 days later on the 16th of March that year with daily price limits, but no Asian trading hours. Since then, the price has generally trended downwards with a large percentage of that decline happening this year. So the price has come under significant downward pressure this year, and this resulted from factors such as bearish primary nickel market fundamentals, disappointing Chinese demand since the easing of its COVID-19 restrictions at the end of last year, and US dollar strength has resulted from the US Federal Reserve's fight against inflation. And because of this, the LME 3-month nickel price has fallen by about 24% since the end of 2022. And this is shown by the purple line in this chart. But despite this, the price is still trading, has been trading recently around the 22,000 to 23,000 US dollars per ton level, which is still a historically high mark. One of the main impacts of the squeeze has been a drop in nickel market trading liquidity. Following the events on the LME, many market participants either decided to reduce their exposure to the nickel market or exit the market completely. And these developments have contributed to very low trading LME nickel trading volumes since the squeeze, shown by the chart here. The LME restarted its Asian nickel trading hours on the 27th of March this year, so over 1 year after the initial squeeze happened. And this was hoped that will rebuild liquidity on the exchange, but As of yet, it hasn't done so. It's failed to lift trading volumes, and this is because many Chinese-based market players have opted for other pricing options, such as those on the Shanghai Futures Exchange. And because of this, LME nickel trading volumes have averaged around 37,250 lots per day since the Asian reopening, and that's still way below pre-squeeze levels. And this lack of liquidity has resulted in heightened nickel price volatility since the squeeze. Nickel's always had volatile price moves, but since the squeeze, it's got worse. The price has closed within a wide range of over 8,600 US dollars per ton in the first quarter of this year, and that is nearly 3 times the range for the fourth quarter of 2022, or 2021 rather, the last quarter before the squeeze. And this is shown by the chart on the left. And these illiquid nickel trading conditions and volatile prices have caused LME prices to become somewhat disconnected from what's happening in the physical market. And this itself has contributed to a reset of traditional pricing relationships between LME nickel prices and the prices of key nickel products, such as battery-grade nickel sulfate, as you know, is a key input of the lithium-ion batteries that are used in the EV sector. The chart on the right is evidence of this, and it shows the performance of the LME 3-month nickel price and the price of battery-grade nickel sulfate. The nickel sulfate price is based on the Platts nickel sulfate China assessment by S&P Global Commodity Insights, and the chart shows that the LME 3-month nickel price has largely outperformed China's battery-grade nickel sulfate prices since the squeeze. And although both prices have been under downward pressure because of generally weaker global primary nickel market fundamentals this year, the LME price, which it normally trades at a discount to China's nickel sulfate prices in US dollar terms, and that's largely because the LME price is based around class 1 nickel, and that's traditionally been used as an input for nickel sulfate. It's normally at a discount, but most recently the LME price has commanded a premium of around 2,000 US dollars per ton over China nickel sulfate, over the Chinese nickel sulfate price. And in an effort to restore the market confidence in its nickel offering, near the end of March, the LME unveiled its 2-year action plan to strengthen its markets following the squeeze. And this plan included recommendations based on the independent review of the short squeeze that was released in January this year. And the plan includes development of a China-based spot offering for nickel sulfate and nickel matte. But yeah, this is a 2-year plan. It's going to take some time. It's probably going to be lengthy consultation periods involved. So based on this, we expect non-traditional nickel pricing relationships, the liquidity, the volatility, to remain a feature of the LME nickel space in the meantime. Right, so now moving more on to the demand side, and for nickel, stainless steel accounts for around 70% of global primary nickel demand. But despite this, we expect demand from the electric vehicle battery sector to be the main driver of global consumption growth for nickel over our forecast horizon. The slide here summarizes our forecast for the global passenger plug-in electric vehicle market. As a quick clarification, we define a plug-in electric vehicle, or PEV, as any vehicle you can plug into an external charger, and this includes pure battery and plug-in hybrid electric vehicles. The chart on the left shows our global passenger PEV sales forecast. Although China's PEV sector has enjoyed a challenging start to the year, so far, and this has mainly resulted from the sector adjusting to the end of government subsidies for PEV cells, we expect China's PEV cells to recover as the year progresses. And because of this, we expect global sales to increase by 56% year over year to around 10 million units in this year. And moving further on, we forecast global sales to expand over our forecast horizon, our 5-year forecast horizon, to around 29 million units in 2027. And this is helped and spurred on by government's support of the e-mobility transition and the wider green revolution of the global economy. And as well as PEV cells, the choice of battery technology for PEVs is crucial in determining future demand for battery metals. The market is moving towards high uptake of LFP and nickel-intensive nickel manganese cobalt chemistries, and this is designed to find the balance between and the optimum between battery raw material costs and performance. We expect the share of both nickel-intensive NMC batteries, that's those with 8 parts nickel and above, and LFP batteries, which contain no expensive nickel or cobalt units, to increase over our forecast horizon. And this will be at the expense of declining shares of NMC 532 and 622 cathodes. And this is shown by the chart on the right. So yeah, to sum up the demand side for nickel, we're expecting increased use of nickel-intensive cathodes aimed at maximizing driving ranges, especially in more premium vehicles, combined with rising PEV sales and penetration rates to allow nickel demand from the passenger PEV battery sector to rise rapidly in the medium term. And because of this, we expect global consumption of nickel to rise at a strong CAGR of around 8% of our forecast horizon, as shown here. Okay, so now moving on to the supply side, and one of the market developments that's been able to steal the headlines away from the squeeze in the nickel market has been the Inflation Reduction Act. US President Joe Biden signed into law the act, the Inflation Reduction Act 2022 in August last year. The act leverages tax credits and low-cost financing and includes some domestic manufacturing incentives to fight inflation and promote the clean energy transition. The act itself includes a sourcing requirement for critical minerals used in an EV battery, including nickel, cobalt, and lithium. And this is designed to incentivize much needed investment in the US battery metal supply chain. And this investment is indeed much needed. Our mine supply data shows that the US has only one mine that produces nickel as a primary or main commodity, and that mine has a short mine life. And also the US doesn't produce any class 1 refined nickel or battery grade nickel sulfate. Despite the good intentions of the act, we believe that challenges relating to this sourcing stipulation will cap the positive impact that the act could have on the US nickel supply chain in the medium term. One reason behind this is that building a mine is not easy. Our team did a review of historical projects and it showed that the average time taken to bring a mine from discovery to commercial production is nearly 16 years, with a range between 6 years and 32 years. As well as that, the US is known for having a very protracted and lengthy permitting process for mining. And on average, it takes 7 to 10 years to secure the mining permits that are needed to just start building a mine in the US. And this is compared with 2 years in countries such as Canada and Australia. Another issue is that our data shows that the US's contained nickel reserves are significantly lower than countries such as Indonesia, which is the world's largest primary nickel producer, shown by the chart on the right. Because of these potential issues, we expect the US will look to Canada as a source for EV metals such as nickel, and that's mainly because the countries have a free trade agreement and that will mean that Canadian material will be accepted under the Act's sourcing requirement. But we still expect the US to face competition for Canada's nickel products from the EU. The EU also has a free trade agreement with Canada, and it's published further details of its equivalent to the US Inflation Reduction Act, the European Critical Minerals Act, the European Critical Minerals Act in March this year. So now we're going to move forward looking at Indonesia. Indonesia is currently excluded from the US Inflation Reduction Act because there's no free trade agreement between the countries. But like I said, it is the world's largest primary nickel producer, and we expect Indonesia to be the main driver of global output growth over our forecast horizon. And this is driven by the country's push to become a EV metals hub, and this has been underpinned by its 2020 its 2020 export ban on nickel ore. As shown by the chart on the left, Indonesia's exports of nickel matte and mixed hydroxide precipitate, intermediate products that can be used and can be processed into battery-grade nickel sulfate, have surged. And this has occurred since the country's first HPAL plant started operating in May 2021, and Tsingshan started processing nickel pig iron, which is traditionally used as an input for stainless steel making, into high-grade nickel matte for the battery sector. And this started at the end of 2021. And most of this material is being exported from Indonesia is being shipped to China. But these production methods that are used to produce these material come with some environmental drawbacks. Data from the International Energy Agency shows that the global warming potential of the nickel matte via nickel pig iron route is over 5 times higher than that of producing Class 1 refined nickel from sulfide ores. HPAL fares a bit better in that regard, as shown by the chart on the right, but there are still environmental concerns related to the waste disposal around HPAL plants. We previously expected these environmental drawbacks to deter EV battery producers outside China from using battery nickel material products produced in Indonesia. But there are a growing number of Western automakers that are investing in Indonesia's nickel supply and battery supply sector, such as Ford, and previously Tesla's Elon Musk was saying that they're mainly looking for green, environmentally sustainably produced nickel, but it's not looking like Tesla and Indonesia are going to partner up in the future. So, and this may be the result of several factors. It may be the result of higher Class 1 nickel prices since the squeeze, which have made cheaper intermediate products produced in Indonesia more attractive. And it may also have come in the aftermath of Russia's invasion of Ukraine, which has resulted in some self-sanction of Russian material, meaning that it's effectively been removed from the supply equation for some consumers. So in summary, we expect the nickel supply side of the equation to be an Indonesia story in the medium term. Expansion plans by China-based producers are expected to help Indonesia cement its position as the world's leading and largest primary nickel producing country. Indonesia's first nickel sulfate plant started operating at the end of March, and the country is continuing to commission nickel pig iron plants also. And combined with this, this will also be supplemented by rising battery-grade nickel sulfate output in China, and which is being fueled by the arrival of battery-grade nickel sulfate intermediate products from Indonesia, as I discussed earlier. And as well, in addition to the elevated Class 1 refined nickel prices, such as those on the LME, Tsingshan is preparing to add Class 1 nickel to its production mix and it's planned to start a plant that can produce Class 1 nickel from nickel matte at the end of June, or by June. And all of these trends are illustrated by our expectations for rising global primary nickel output over our forecast horizon, shown by the chart on the right. So I'll conclude by giving you an overview of our global nickel market outlook. We're expecting the global primary nickel market surplus to expand from around 100,000 tons in 2022 to over 200,000 tons in 2023. And this is based on expectations that supply growth will exceed demand growth, and it's largely related to developments in Indonesia. And this is forecast to lower the LME three-month nickel price, the average LME three-month nickel price, from around 25,600 US dollars per ton last year to an average of 23,000 US dollars per ton this year. So moving on to the rest, for the forecast horizon as a whole, and for the rest of the forecast horizon, we're expecting growing battery demand to eat into the nickel market surplus and return the market to a deficit in 2027. And despite our projections for the global primary nickel market to remain oversupplied for most of our forecast horizons, we expect prices to average above historical levels. And this is based on our expectations that prices will remain elevated until the LME successfully implements measures to revive nickel trading liquidity on the exchange. And we believe that these factors, what's happening in the battery sector and the LME situation, will contribute to a new normal of elevated or historically elevated LME nickel prices. But again, these forecasts are subject to